Okay, everyone, welcome back. It's been a while. A lot has definitely happened in the market, and there is a lot to talk about. So I'm not sure if we're going to fit everything in 20 minutes today, actually, but I'm going to do my best to see how much we can fit into that time and get through as much of the price action as we can, as well as the prior trades that we should have entered. If you didn't enter, what are you playing at? What are you playing at? All right, so we've had many a setup. Some were given here, some not given. But we've had some pretty good trades, and we've actually had a really nice one today as well, which we're going to go into. So if you're sniping these markets and you're collecting these profits, remember to put your profits up in the profit wall. So the profit wall can be found on Discord. So we've got a growing Discord community. Feel free to join that. The link's in the bio. And we've got our profit wall over here. All right, so we had Invincible J, who put 79% sell on Bitcoin. So that's great. We love to see it. And then we've had a few trades after that. So this is growing. Obviously, every day I post my trades here as well. And the last setup was this setup, wasn't it? And this setup actually played out really, really well. So we're going to talk about that in a second, see if we were able to get into that. So congrats if you took that setup. That was a juicy one. We're going to measure just how much you would have made off of that in a second. All right, so let's get straight into it. It's going to be rushed. We're going to try and get through as much as we can. So feel free to pause the video, rewind it if you need to, because I'm going to breeze through the price action. All right, so first things first. As I said, congratulations to who secured a bag on that trade. This is on the 12th of June. I gave a few setups, the next following setups. Now, the next one was saying, right, we've got this range, this box, and we have broken, one leg down. We have then, it's kind of, what would we call this then? Well, this would be called a redistribution, wouldn't it? Kind of looks like a flag. I missed the trade up there. And I was gutted because that was a nice move, and I knew it was coming. I saw it coming, but I just didn't pull the trigger because my life is so busy at the moment. And actually, apologies for missing Thursday and Friday. I was actually away. I was away in Geneva, but I'm back. I'm back now, so we can get at it. All right, so as of this trade, I said, right, well, we've got this accumulation or slash digital, whatever you want to call it, as long as it makes sense to you. We've broken bearishly. What do we expect? We expect a retracement. This is a very, very aggressive retracement. Not only did we get a retracement, well, we've got a retracement all the way back up into this zone. This zone that we obviously broke down from. And, this was quite an aggressive move up. Remember what I always say here, easy up, easy down, easy down, easy up. So as you can see, as we fell down here, not much of a market structure to go off of. That's why we recovered all of that quite severely. Leaving, of course, on the way up, these fair value gaps. Now, these fair value gaps are kind of magnets. They're going to get filled eventually. So we said trade number one would have been this short here from the top. Now, it was all the way at the top of our prior range. All right. Now, price has retraced all the way up. Usually, we don't like to see price retrace all the way up. Why? Because if we were to draw our fib and pull the fib from this level all the way down, well, we will see that that's past the 38% level. It's past the golden ratio. It's past the 786 level. I mean, this looks like it even passed the 90% level. All right. So the higher and higher we go through in our fib ratios, the less likely we are to get a reaction. However, we did have a zone here, didn't we? We had a confluence zone which we mapped out and said, this is the zone we're looking for a trade. And this exact trade would have given us a 7.66 risk to reward. Which means, just to get you guys understanding the importance and the power of risk to reward, it's so pivotal. When you really understand that your trading game is gonna get to the next level. You won't be chasing positions every 5 seconds. You'll just wait for your levels and enter your trade. 7.66. That means if you were to risk $1, you would have made $7.66 in that trade. If you were to risk $10, you would have made $76.6 in that trade. All right. If you were to risk $10,000, you would have made about $70,000 on that trade. All right, so that's not bad. These are not bad numbers. All right, so let's see how that played out. Let's see, did we get our entry? Now look at that. Look at that. That was a very, very, very decisive move down off of that zone that we were looking out for. So congrats if you got into that trade. If you enter that trade, make sure you're putting your profits in the profit wall. Otherwise, I am coming for you. All right. So we obviously got that move down. We actually went past down our profit target. We're going to look at what the actual target was in a minute and see how you would have done with that trade. So that trade was, if we were to retrace, if we were to retrace back in time, let's see. Let's see how we would have entered that trade actually. Let's see if we got our confirmation. So obviously the trade we were looking at was a short from around here. All right, I'm just putting this back. And we're going to see how we would have entered that trade if we got our confirmation on the entry. So a lot of you are always saying, right, TJ, how the hell do I enter trades? Well, this is exactly how we enter a trade. All right, so as we can see here, we've got a series of higher highs and way up. Okay, we've got high, 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 low, high, 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 low, high, high. All right. And as we get close to our zone, let's see, did we get a nice reaction? Did we get an entry opportunity, or was it just a flush down? Okay, so at this level, we're going to get rid of this so we can see clearly what's going on. I'll get rid of this as well, to be fair. So we can see here that price has made a high, it's made a low, it's made another high, it's made a low, then it's made a high, it's made a low, then it's made a high. Great. Okay, so at this instance, obviously this is a zone we're looking out for. I'll just draw it there. This is a zone we're looking out for. It's tagged our zone. Now at this level, what are we looking out for price to do in order to get interested in this trade? Well, we're looking for that last high low, to get lost. We're looking to close below that last high low. Did we close below that last high low? Yes, we did. Did we close below it on the 3 minute? Yes, we did. Did we close below it on the 2 minute? Yes, we did. Did we close below it on the 5 minute? Yes, we did. Did we close below it on the 10 minute? We don't really have market structure, though, do we? All right, so we closed below it, but not only did we close below it, yes, even if you wanted to enter a trade off of the close, so this bar would have ended here. This is where you'd have got the close. So you'd have made your short there. If you made your short there, you'd have to put your stop loss all the way up there. All right, that's fine. That's fine. We would have still been quite safe with that one. So price came back, it retraced, and it melted down. All right, so our stop loss would have had to be there. If we had entered a trade just purely off of that close, we would have been in substantial profit on that one. Substantial profit, and we're going to see exactly just how much we would have made. This is assuming you only took one profit, and that was literally at the peak movement level. So let's see how that would have gone. Price is just doing what it did. All right, now we're gonna look at it in a sec. So let's let price do what it's doing. It's coming down. Let's quicken it. So we're going to 24 minute. All right. So price keeps coming down, breaks further down. All right. So I guess we'll stop there. Does the price come further down? No, I think that it stops there. All right. So let's do our risk reward analysis. This means for this trade, we actually would have been able to net, about 8.29x. So if you put 10 grand, you get 80 grand off of that. Yeah, that's if you entered on the close. Now, I usually preach, don't enter on the close, wait for that retracement. If we waited for that retracement, let's see how well that trade would have done if we waited for that retracement. So let's go back. Okay, so if we waited for that retracement, our entry would have been around here. All right. So you might not have caught the actual top, but your entry would have been about there. Now look at what that does to your risk reward. That changes your risk reward from 8 to about 15. That means if you put 10 grand in that trade, you would have made $150,000 off of that trade. Not bad. Off of just one move. So you see why I always say, just wait for your levels. Just wait for your high probability zones and get into the trades at your high probability zones. All right? Because there's no point entering 60 trades a day when you can enter 2 trades a day and you've netted 20 grand, 30 grand, 40 grand from those 2 trades. Okay, so just wait for your zones. All right, we're 10 minutes in. Okay, we're not doing very well. Let's see if we can speed this up. Okay, so shortly after, the price has actually done what now? The price has broken down from our range. Not only has it broken down from our range, it's given us a nice sign. I'm thinking, right, this is a potential Trinity model. We've got tap 2 taps at the top, and we're looking at potential 3 taps at the bottom, 1, 2, and 3. Is this the Trinity Model 1? If this is the Trinity Model 1, not only could this be a Trinity Model 1, could this be a PO3 as well? All right, are we seeing what looks like a PO3? Remember, what's a PO3? A PO3 is when you get, price creating a nice range. As we can see here, a nice range, okay? And we can show this range with this box. And as price creates that nice range, it breaks down from that range, but not crazy, not convincingly, tiny break from that range, as we can see from this other box, all right? And shortly after it breaks out for that range, it rallies up, all right? This is what we call a PO3, all right? Rule of 3, PO3, whatever you want to call it. We have accumulation, manipulation, expansion. So is this what we're having here? Is this our accumulation? Could this have been our manipulation? And are we currently seeing our expansion? All right. So bearing that in mind, I said, you know what then? I'm going to look at this level as a range because we haven't broken down convincingly. Not only have we not broken down convincingly, if we look at the market structure on the way down, all right, it's looking like it's starting to slow down, isn't it? It's looking like it's losing some steam. Why? Because if we measure this breaking structure, this length here, all right, that is a whopping 2.5 grand. 2.5 grand move. We'll make it bearish because it's on the way down. If we were to do the same thing from this breaking structure to the one we're currently at, that's only $997 move. So that means, the strength of those breaking structures, they're starting to wane. They're reducing. And that is a sign that we're about to range. That's a sign that the sellers are losing momentum. And lo and behold, they lost momentum. And guess what happened? We start to range. We can see that next leg did not rally lower than the other leg. So what did I do? I said, right, well, that's a range. I can see a range here. All right. This being my new range. Okay. So I'm going to get rid of this. As soon as I said, right, we can see a range here, I'm looking to say, okay, what's my market structure saying at the decisional leg? Well, that's when I'm going to move down to the 10-minute time frame. Now, on a 10-minute time frame, as we're curling down, I'm looking at the market structure to see, are we going to get a break in structure as we head down? First of all, also, are we going to sweep this low? We don't end up sweeping this low, but we do get a change in market structure on the way down, and we can see that clearly. Why? Because on the way down, we've got low, 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 high, low, 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 high, low, 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 high, low, 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 high, low, low. We're just going to check whether this is actually whether this rally is lower than that prior one. It doesn't. Okay, so this is our structure. So what does that mean? That means in order to get that change in market structure, this guy has to go. We need to lose this level. All right, I'm going to get rid of this for now. Not only do we have to lose that level, we also have to lose that level with a retracement. That's the tricky part with this one. With a retracement. But what I also noticed is that we had this beautiful, beautiful trend line of liquidity. We had all these stop losses here, here. All right, so we had all this momentum for price to take all the way up. And this is why when price came up, it came up rapidly. It did so rapidly. So what happened then? What happened after that is, well, we broke structure, as we can see here. We broke structure bullishly. Now on a 10-minute, we did not get a retracement. So you probably wouldn't have entered a trade based off of a retracement. You might have entered based off of a close. But on a 5-minute, we got a mini retracement, a tiny mini retracement. This is your 5-minute retracement here. Okay? So if you were to enter that trade, you would have entered that trade right there. However, this is where you start to say, right, what is risk reward telling me? Risk to reward is telling me, well, if I'm entering this trade here, my stop loss has to be down here. Yes, I could refine it, but technically my stop loss has to be down there, okay? And if my stop loss has to be down there, where is my profit target? Does it make sense to enter this trade? If my profit target is this range high, well, then this trade is only giving me a 1-to-1 risk to reward. Does it make sense to enter a trade and risk 1% of your account just to make another 1% of your account? No, it doesn't. No, it doesn't, all right? So that's when I decided, you know what, it's fine. It's fine, all right? It's fine. It's fine. We're experienced enough, not to put our stop loss all the way down here. So I loaded my trade so that my stop loss was just below this low here. So if price was to come down below this low, I'm out. And I was happy to take that chance. All right, and what did price do? Well, price came all the way up, giving a nice 16 risk to reward. Okay, so not bad. So what am I saying here? I'm saying here, if you risked, okay, not everyone is playing with 10,000 and 20,000, 20,000 pounds of dollars, right? But anyways, if you risk $10 in this yellow region, okay, if this trade went in your direction, let's check what the risk to reward is. The risk to reward is 16. You would have made, all right, if you risk $10, you'd have made 16 times 10, okay, which is 160. Not bad. $10 for $160. Not bad. Okay, so that's how risk to reward works, guys. I'm gonna drum this into you guys until you fully understand it, and it will completely change the way you trade. All right. Okay, so that's a trade I'm currently in. Well, I'm not in it anymore. I've taken profits, and I've actually come out of that trade at the range high. All right. Okay, so now we've got 3 minutes to talk about what the market could potentially be doing and what the scope is. All right, let's not lose sight of things. In terms of the higher time frame, we're still in this range. All right, this range has been going on for ages. I'm sure those of you who watch me here every day, you're sick and tired of me saying we're in this range, but yes, we are. We're in this range still, okay? And we're going to play this range how it is. Now, what can we do from this range? We can either go up or we can go down. Very simple. Now, if we're going down, where is our next zone? If we go down and we rally below this level, which is our last bit of support, which is at 64,874, we do have a daily zone here, which I think is a very powerful level. This is my next POI. It's my next area of interest, point of interest that I'm going to be looking out for. If we lose this level, if we lose this decisional demand level, chances are we're coming down to this range low. All right. But however, pay attention to market structure. Market structure internally has said we've had a high, low, high, low. We've broken the structure. Okay, low, high. We've broken the structure again. All right, so market structure on a daily internally is bearish. It is bearish. All right, so nothing stops us from printing a low high for another low low. Maybe that's where we get that reaction from. All right, so that's the bearish scenario. What's the bullish scenario? Well, the bullish scenario states, well, let's take a look. Let's take a look. If this PO3 is to work out, that means we've got our manipulation. We've got our accumulation, manipulation, and we've got the expansion that should come all the way up. Well, if that's the case, right, if we think we're going up, then we need to be looking out for longs. Where can we look to enter a long? Well, let's take a look at the market structure. In terms of our market structure, let's take a quick look to see what's going on. I've got 1 minute, just above 1 minute. All right, in terms of our market structure, what do we have? Well, we have a high, a low, a high, a low, a high, a low. All right, that means this level is still secure. So if we break above this level, all right, at 67,401, I'm going to look for that retracement. Okay, and that retracement will be a very juicy place to enter that long, all the way up. All the way up. That would be a nice place to enter that long. Now, how am I going to find the exact zone to enter that long? Well, I'm going to first of all take a look at the profile. Let's see what the profile is. Well, look at that. Look at that. There's a lot of resistance here, guys. There's a lot of resistance here. So if we break above this level, perhaps we also want to see us break above that POC. And if we break above both and retrace, that is a surefire sign for a good long all the way up. Okay, so that's what I'm going to be looking out for as far as my next long. All right, as far as market structure goes, this is simply a RIMC, the range initiation mitigation continuation. What do I mean by that? So here we've got our range. We're going to initiate from our range. We're going to mitigate back into our range, pull back into zone, and we're going to continue further up. That's if we're playing this PO3, but we're going to look at price action to see what happens at this level in order to play that. Okay. But that's kind of it. Those are the high probability zones. I'm going to tidy this up, and I'm going to show you some exact zones and post it as a picture so that you guys can see and have those levels. Don't forget, if you want my own personal chart, you can download it. I always post a link on Discord. All right, so where you can find it, you can go here. You can find that here. If you go on Discord, you go on the new members. All right, here you have it. This is a link. So if you download this link, it will take you to, it will literally download my chart for you, so you can use my levels as I use them. All right. Anyways, I hope you found that useful. If you want to inquire about anything else, be it bootcamp, be it one-to-one lessons, or just a general chat about trading, feel free to hit me up. I'm available on Discord. Otherwise, I will see you guys tomorrow.